Joining us now for CNBC Exclusive is Federal Reserve Governor Chris Waller. Governor Waller, welcome to the show. Good to see you.
Hi, Sarah. Good to see you. Thanks for having me on.
Well, it's good time for you to be here because we're in the middle of this raft of economic data. We had really strong jobs last week, sort of more benign inflation report and CPI yesterday, and then some mixed data today around retail sales and jobless claims. I'm just curious how you're interpreting it all and what kind of picture it's painting for you.
Yeah, the inflation data that we got yesterday was very good. It's the sixth month out of the last 8 where we think core PCE inflation will come in below 0.2, which is getting very close to what our 2% inflation target would be in terms of core. So the inflation news is good. We had a couple of bumpy months there in September and October, but it looks like it's getting back to trend. We'll have to wait and see whether this continues. I believe it will be. We'll see some base effects come out, but last year we got a shock with inflation in January and February. They kind of put us back in terms of our progress for cutting rates. I'm hoping that doesn't happen again, so that if we continue getting numbers like this, it's reasonable to think that possibly rate cuts could happen in the first half of the year.
Rate cuts in the first half of the year. Market's not pricing that in, but that's what you're looking for?
Well, I'm saying it depends if, and always the big word if the inflation data continues to come in like it has been. If we don't, if we get a surprise like we did last year, then we're going to have to stay on hold until we get inflation coming back down. But I'm optimistic that this disinflationary trend will continue, and we'll get back closer to 2% a little quicker than maybe others are thinking. But that's my view.
Why? What do you think is keeping it sort of stubbornly high? Seeing shelter prices still up there, food prices are still rising a bit. I'm just curious what you're watching that gives you confidence that you'll get to 2% sooner.
Well, like I said, 6 of the last 8 months, we're running close to, not too far off a target. And I think there's no reason to expect that will reverse or change. So looking at the 12-month year-over-year numbers, it doesn't look like we made a lot of progress on inflation. But like I said, if you go over the last 6 to 8 months, in core PC inflation has been coming down, and I think that will continue. Now, we had a big shock last year at the beginning of the year. There's some concerns there might be another one of these beginning of the year kind of price shocks. I'm hoping that doesn't happen. So if it doesn't happen and we continue to get through a couple of good months of data, then the base effects will kick out from last January and February, and we'll see some further progress on inflation going into the second quarter of this year. So based on that, if inflation's down, the labor market stays solid, then you could start thinking about restarting rate cuts later in several months from now.
Right, you're not talking about January, you're talking, I don't know, March? Does that sound reasonable?
Well, January, we need to kind of see what's going to happen. It's the chair has said we're in really no rush to do things. We need to see a little more progress on inflation. This month was good, but we need to make sure we get through the turn of the year to make sure it continues. We'll have to wait and see. I don't think March could be completely ruled out, depending on what the data, but anything that kind of disrupts that, it's likely to push it back some. But it's as long as the data comes in good on inflation or continues on that path, then I can certainly see rate cuts happening sooner than maybe the markets are pricing in.
And how many are we looking at this year?
Well, again, that's all going to be driven by the data. I mean, if we make a lot of progress, you could do more. And it's also going to depend on where people think the neutral rate is. There are people that think that we're got a lot closer to neutral, and therefore there's not as many possible cuts coming. Others have, if you look at the SEP, the median is a neutral of about 3, which would imply you still got maybe 4 cuts, 3 cuts, depending on what the data tells you this year.